It's been a pervasive problem forever, and it will never go away. I never liked that model. I think it's a very noisy model to fit and alignment rather than mass marketing and noise. Everyone wants to get like hooked up with the right people at the right time with the right circumstance, and it hardly ever happens. The difference between programmatic and opportunistic is, if something fits a programmatic buyer, they just pick it up. It's not about picking up a mass of properties anymore. It's about picking up the right ones. That creates more transparency in a real estate transaction. So there's a misalignment. There's this problem about mismatching and fit, right? And it's not just our problem. It's the problem of every single real estate broker that's in this business. People aren't looking for mass marketing. They're not looking for blasting. They're not looking for a lot of people. They're looking for the right ones. Idea of fit and alignment over noise. And the things we're building in the future are all about creating technology to make that all the more possible and real. People's buy boxes change every single month or every single quarter. Buy the land, build the lots, sell the homes.
The CEO of Strata SFR, Adam Stern, a visionary in the real estate world.
Hi, my name is Adam Stern. I'm CEO of Strata SFR.
And a leader who transformed single-family rental into one of the fastest-growing asset classes in America. Since founding Strata in 2020, he has brokered hundreds of millions in deals, building the firm into a trusted powerhouse for investors nationwide. Through bold vision, innovation, and unmatched leadership, this is Adam Stern. This is Strata SFR.
Our guest today is Adam Stern, the founder and CEO of Strata SFR, which markets and sells single-family rental portfolios and build-for-rent communities to a variety of investors, buyers nationwide. We'll be discussing how contractors, builders, and developers need to evolve their approach to sourcing and selling in the modern real estate market. Adam, it's a pleasure to have you here with us today.
Thanks for having me, Guy. How are you?
Yes, I'm doing great. Thank you. To start, I would like you to explain a little bit more about your business, and I would love to know what your role is and how it fits into the bigger picture of your company.
Sure. Yeah, happy to. So I'm CEO and founder of Strata SFR. We're essentially a boutique investment real estate brokerage where we're focused on a very narrow band of real estate. And that includes, like you mentioned, single family rental, build for rent, which is this new asset type in the institutional investment realm where, well, I'll go into that one second. And the other thing we do is land and lot brokerage. So we have, real estate investment brokerage, three kind of asset types that we focus on because that's the network of people that we've, built over the years. And we consider ourselves more consultants as much as we are brokers, probably problem solvers more than we are brokers, everyone from the people that we serve on the portfolio front, they have real problems and they have a need for real solutions. And a lot of times those people are out there in the world and they feel all alone, and they're not, because there's a whole industry that popped up that was designed to help them execute. And guys like me came into the industry not knowing very much about anything, but really growing our entire business specifically for this very small segment. And I was lucky enough to build my business in this very small SFR portfolio segment, branch out into build for rent, which was at a time when builders started to partner with investment companies to build homes for rents. And that was a new trend. And we were at the forefront of that. That eventually gave way to interest rates rising and build for rent being a little bit harder to pencil. So a lot of builders said, hey, we can't sell build for rent. Real estate market's a little bit scary. Selling retail homes is a little more scary. Hey, Strata, can you help us sell our land and lots to your investors or your builders? So it's just kind of a natural evolution of starting from SFR, going into build for rent, and eventually going into land and lots. So that's Strata. And I'm the CEO. I'm in charge of all strategic decisions, hiring, managing our workforce, technology, you name it, I'm in charge of that.
Yeah, I would imagine that you wear many hats throughout the day. I would just imagine if you can give us a glimpse on what a typical day look like for you.
Yeah, sure. So it's interesting, we've never been very heavy into marketing. We've been very heavy into social media because I love it as a medium, and I think we could tell good stories there. So typical day for us is I've got me and a team of people that help me engage buyers, engage sellers. So generally, in a given week, we might get approached by a handful, anywhere between 3 and 5 sellers that are selling anything from big portfolios and small portfolios of rental properties to developers that are thinking about developing for rents, or builders and developers that have developed land and they're just looking for an exit. And more than that, they're looking for some guidance on the best path to take their project and their hard work and find a market of buyers that are willing to pay the right price for them. So on the one hand, we deal with owners and sellers acting as this consultant and brokerage entity. And on the other hand, we kind of are a collective of buyers. Buyers call us all the time. We meet them through social media. We meet them through conferences. And our kind of tact with buyers has always been join the club, let us know what you're buying, tell us what you want to buy, and let us vet you a little bit. But pretty much we're going to database you and we're going to put you into this big network of strata buyers where we're not really going to call on you until we think something fits exactly what you told us you're looking for. And that's pretty much the game. It's a matter of attracting inventory and attracting enough buyers so that there's a place for that inventory to go at the end of the day, which I think is a departure from what most brokers do, which is, most brokerages are geared toward finding listings, right? And somehow getting those
Yes.
listings on a platform like a marketplace. And through that marketplace, they generally attract lots and lots of buyers. I never liked that model. I think it's a very noisy model, and it's people that are seeing stuff they don't want to see, owners wasting time with buyers that are not aligned with them, buyers that are, wasting immeasurable amounts of time digging through the everything to get to the very, deal they really want to do. And I always kind of thought it'd be cool to start a company that was more about fit and alignment rather than mass marketing and noise. So we're taking this concept and we're running our business. We've done really well. We're actually having our second best year ever this year in a really bad, not a really bad, but a bad real estate market. Like buyers aren't buying as fast and as furiously as they used to, but lo and behold, we're having one of our best years in our company history. And I think the reason for that is people aren't looking for mass marketing. They're not looking for blasting. They're not looking for a lot of people. They're looking for the right ones. And I think we're onto something when I talk about this idea of fit and alignment over noise. And the things we're building in the future are all about creating technology to make that all the more possible and real.
It's impressive how smooth like these complicated deals can go when you put the right people on the table, that the right fit,
Yeah.
or right.
Yep.
And it's pretty impressive. Your website highlights that you have about like over $500 million in track record across single family residence and build for rent.
Yep.
I wonder, with being part of so many deals, I'm sure you have a lot of interesting insights in terms of like the trends in this market. And
Mhm.
I would like to ask you, like, what shift are you seeing in investor interest or regional trends? Um, are they
Yeah.
chasing portfolios? Are they chasing new build for rent communities or raw lots nowadays? What's the trends that you're seeing?
So it's interesting. The trend that, like, starting from when I started the company back in 2020, I'll talk about kind of like the way business was done and what was happening at that time. It's changed a lot. Originally, like in the SFR industry, in the business, it was born of distress. It was born in 2008 from the housing crash. So the trend at the time was to buy distressed assets, just scoop them up at rock bottom prices and then renovate them and put renters into them. That was at a time when people were still talking about the industry as a trade rather than actual business. They thought they'd buy it, renovate it, rent it, and when the market went up, they would sell it all and they'd all make a ton of money. That turned into, hey, there's really a need for rental properties. And this should be an institutionalized, large scale, operationally minded business. So it turned from a trade kind of into this long term, operationally minded business, but they were still picking up real estate at ridiculously low prices. Like the more real estate prices rose, the more everyone realized that building a new house was actually a better idea than buying an existing one, especially in certain markets, like
Right.
starting in Las Vegas and Miami, and some of the markets where like home price appreciation just went crazy. So they started building new houses. And that trend was called build for rent. Now that the real estate market has kind of hit this plateau where interest rates are high and pricing is relatively high, like the formula for SFR doesn't really work well at all right now, right? And people can't buy programmatically as much as they have in the past, where they used to say, all right, I've got this pot of capital. Let's define our buy box, make this pitch to our investors about what we're going to buy and where and how we're going to operate it. And then they would go out and deploy that capital in those markets for exactly those kind of assets. That's still happening. But even the programmatic buyers are acting less like programmatic buyers and more like opportunistic buyers. I've said this before. The difference between programmatic and opportunistic is, if something fits a programmatic buyer, they just pick it up. If it fits if it's a round peg and it fits in a round hole, they're buying it. Now, even if properties fit the model, there has to be some kind of innate value in it, right? There has to be some kind of seller, I wouldn't say distress, but seller motivation to get the pricing to a point where it hits a certain cap rate and there's a certain discount. It's not about picking up a massive properties anymore. It's about picking up the right ones. So part of the reason why I think Strata is having such a good time this year is at a time when everyone's looking for a very specific thing to fill a very specific need. People are relying on brokers and people that understand markets better than they do in order to facilitate all this. So the trend that I'm seeing right now is just that people being a lot more specific about what they're looking for, being a lot less grabby about getting it, thinking things through, going slower, because they can, they can. They don't have to rush to pick up the deal in fear of the next guy taking it because things aren't moving as fast as they used to move. So this trend of slowing down, and that's causing buyers to have more breathing room, which is causing them to be more specific and intentional about what they're buying, as opposed to the old days where they would just buy with both hands and kind of sort it out later, right? Because if they were getting it at the prices they were getting it at, it was a win either way. In a long-winded way, that's the big trend, the slowing of the real estate market and creating opportunities for people to be more strategic, I guess you could say.
Yeah, and I would imagine that this is low in the market would allow for these buyers to actually bring you in as a strategic partner to conduct due diligence and look at deals and make sure that they are the right fit for them.
Yeah. It's funny.
Right?
That's never really been our strong suit. Like the right now, inventory's everywhere and buyers are still
Right.
everywhere, but buyers are really hard. Like buyers that are willing to make offers are really hard to come by. Um, and I think when buyers come to us, what they hope to find is an access point to the kind of inventory that they want. And like what I think they see in us is when they ask us for something, we generally don't ever show them anything that doesn't fit that buy box, which pisses a lot of people off because they never end up hearing from us again for a while until we find something that fits. And that kind of, that experience with buyers and being this service where buyers can essentially tell us what they want and where they want, and us having to go out and find that, it just highlights this really big gap in the market that I see every day as a broker. I know other brokers see it; they must. And the gap is, even though there's all these buyers out there and they have all this money and they're deploying capital and they know what they want and they have a mandate. The instance in which that mandate or that buyer kind of perfectly overlaps with a seller that has the very right, the exact property they want to buy, that happens very seldom, right? In our business, we've been a relatively small shop for the last 5 years because of this problem. Because when we have a buyer looking for something and we have a ton of inventory over here, it's like, great, let me look for the property you're looking for. We look at all the inventory we have, and lo and behold, we don't have it. It's like, now we have to go look for it, right? And on the other
Yeah.
side, if an owner brings us a deal and they're like, hey, we got this great deal, you've got like hundreds of buyers. I'm sure one of them are going to want to go find it. The problem with that is, people's buy boxes change every single month or every single quarter. So spreadsheets get stale really fast. And the only way for us to like really find a buyer that matches is to go in, kind of look at the data we have and try to reach out to those buyers to have them update their buy boxes. But then again, that's us chasing buyers at a time when we have 100 of them or hundreds of them and a bunch of inventory. So there's a misalignment. There's this problem about mismatching and fit, right? And it's not just our problem. It's the problem of every single real estate broker that's in this business. It's generally the problem of every buyer and seller that's in this business. Everyone wants to get like hooked up with the right people at the right time, with the right circumstance, and it hardly ever happens.
And would you say that this is like a friction point that is persisting, that you're seeing that this tight underwriting and this ever changing need, let's say buy box that's ever changing? Is this like, do you see this issue persisting moving forward?
It's been a pervasive problem forever, and it will never go away, right? Until someone
Yeah,
comes up with some kind
exactly.
of solution that creates more transparency in a real estate transaction. Because you know it's always going to be there, no matter what anyone builds or how great a technology might be. Um, I think it's always going to be there. And like if I give it an analogy, it's like if you go to a restaurant and the restaurant has like 50 things on the menu, but you really feel like one thing, like really, you just want it that night, that day. Doesn't matter how good the restaurant is or how many menu items they have. Like you're not going to be happy at the end of the night because there's this misalignment. You're looking for this very specific thing. Um, and I think, to your question, it's always going to be there. And some things that we're doing are meant to build technology, and we're launching a new platform at the end of this year, early next, to solve this problem of fit, so that people can save time and they can, get out of the noisy clutter of the market.
Yeah, this is very interesting. Would you mind expanding a little bit more on this platform and
Yeah.
what problem you aim to solve?
Yeah, so we've been kicking around a lot of names. So we're Strata SFR, and we're a very specific real estate brokerage. So going along with the name Strata, and the fact this is an evolution and a next step up, we're going to end up calling it Strata Next Level, specifically Next Level, but it's been called Strata Next Level. And essentially, the problem we're looking to solve is that real estate is inherently a relationship-driven business, and every marketplace out there starts with the asset first. And I think that obviously has worked. People have built billion-dollar companies like Zillow and LoopNet and Crexia on the back of that idea. But there leaves room in this market for a platform to solve that problem in a different way. And the problem we're trying to solve is a problem of people being misaligned and people not seeing fit because they don't actually put the relationship first. So what we're doing is essentially creating a way for buyers to basically program in their buy criteria and share it with their existing networks. We're giving people the ability to go on as owners and not list properties, but find buyers they want to show their property to directly without blasting it out there. And we're creating this value for both owners and buyers. On the owner side, we're giving them access to qualified, vetted buyers that they can see before they even show a property. And on the buyer side, we're giving them access to off-market real estate that no one else has access to. And that's well and good. It's a solid idea. But the third component of it is the part that makes me the most excited. It's the third leg, which we call deal makers. That includes like brokers and lenders and everyone that plays a party to the transaction before, during, or after. And what we're saying to these people is like, listen, if you think you want more transparency in your business so that you can essentially offer your service or your insight at the very right time, invite your people to our network, because what they get is access to buyers and access to inventory. And what you get is transparency on what, when, and why they're doing all these things. So you can step in at exactly the right time and offer your product or service. So that's kind of the idea. It's creating this unique marketplace that is really relationship driven first, curated and trusted, and it's driven by people like owners that don't want to blast their real estate out there. They want to choose the buyers they show it to based on those qualifications. It's about buyers not chasing listings, but attracting the right ones by becoming qualified. And it's about, us at Strata and the platform inviting in all of our deal maker friends to invite their network of people to enjoy all this great technology and insight in order to do more business themselves with their own network and by leveraging the network and the technology that we've built. So without being too cryptic, that's pretty much what we're building. That's what we're launching later on this year under the brand name Strata Next Level.
Amazing. I am personally a very big fan of relationship driven negotiations and deals, and it seems like you're putting people first, and
Mhm.
that is definitely an innovation in this industry. I would agree with you. And I've also noticed on your website that you have structured some innovative deals as well, like creative finance deals. I would imagine that, as the market right now is not really hot, let's per se, that we
Yep.
do need to get creative, and especially when you're trying to do like a matchmaking, one-one introductions between vetted buyers and sellers. Sometimes there may not be the exact deal arrangement, the exact deal match, but there is like the creative arrangement that maybe would fit both sides of the equation. And
Yep.
my question to you with this is, can you walk us through like how capital markets changes are shaping deal structuring and where you see the opportunities versus the constraints in today's environment?
It's a complicated question, and I'll caveat this by saying I'm not a finance guy. And while I understand where the money is raised and how it's raised and how it's put to work, I'm not an expert on capital financing or structuring. So I don't know how much insight I'll be able to give you onto that actual question. What I can say is like there's a never-ending supply of capital that wants to get at real estate in general, but specifically the asset class that I'm in, which is rental properties, single family rental properties built for rent, even land and lots fall into that under the built for rent category. There's a never ending supply. And the reason why that is the US housing market has performed beautifully through like all kinds of really, really traumatic changes from the housing crash all the way through really low interest rates and now higher interest rates. And all throughout that, the capital has seen the asset class performing extremely well and it being extremely, shouldn't say the word safe because like it's investment and there are risks, but steady. It's a steady asset class. So what I know is capital's, evergreen and finding the deals that fit are more challenging. So when it comes to like structuring deals, I'll even go over a deal that I structured with, a couple clients of mine that was really unique. Again, it wasn't on the finance side. I was on the brokerage side. So I could talk more about that. But hopefully, doesn't really answer your last question. So we just got done with the deal. We closed on it a couple weeks ago. It was between an owner. I'll keep the names out of it for right now,
Right.
because I get their permission to talk about it. But developer in Florida came to us with like a 55-acre parcel that he bought, and over the course of several years, he went through this process called entitlement. He got all the zoning done, and he submitted a site plan, and he did all the work in terms of like geographic testing and environmental testing, all to the point where he could essentially sell it to a builder or some kind of buyer that would take that entitled land and start moving around dirt, building the lots and eventually building the houses. So went through three buyers on this deal. First buyer got it under contract, backed out. Second buyer did the same thing. Finally got to one of my good friends. He runs a company. I'll mention him. His name is Chris Funk. He runs SI Homes, Southern Impression Homes in Florida. And he got his hands around it and he's like, this is a really good deal. It's not a great deal, but it's a good deal and it fits our purposes. So I started looking at it like any builder would: buy the land, build the lots, sell the homes. But during this time, the housing market kind of flattened out, right? Homes weren't selling as fast as they once did. So what Chris did was really ingenious. He went out to all of the build for rent investors that he knew, and he said, "Hey, I'm thinking about buying this. I don't think this works for us necessarily as a for sale community, but this can make a really great build for rent deal." And instead of Chris walking away from the deal because it didn't work for his purposes, he spent his time going out and pulling on all the relationships that he had with build for rent investors that wanted to own properties in this area of Florida. And by the way, those build for rent firms, they don't buy land, they don't develop land, they don't build houses, they just buy rental properties to operate them. So the deal that Chris worked out is he got one firm to bite. They really liked the project. The numbers were right for them. And throughout this process, he ended up buying this on behalf of SI Homes, closing on it, all the while working up all the numbers and all the building costs and all the development costs and the timelines in order to deliver a finished unit for the end buyer that was eventually going to own the homes. And he de-risked himself, I think, in the deal by essentially having that exit already lined up right even before he bought the land. So, talk about a genius move where he was able to actually buy the land, develop lots, and he's now going to be building homes. But he actually lined up the buyer at the end right before, like even before anything was done. Not too dissimilar from the company and the business that you're in with, finding renters for home buyers before they buy a rental property. Same concepts.
Yes.
To his credit, the deal probably fell apart 4 or 5 times during the entire course because there were this issue or that issue where the capital partners didn't necessarily see eye to eye. But it just goes to show if this is just a real estate based deal where relationships didn't matter, it would have died an early death, right? It wouldn't have gone anywhere. But because I had the relationships that I had, was able to get 3 separate buyers under 3 separate contracts. Chris had the right know-how to actually look at the deal, vet it, understand it, analyze it to the point where he understood it was a good build for rent, and had the relationships to go out there and find an end buyer at the end of the day. And the end buyer had the relationships with the capital investors to make it all happen. Like, talk about a relationship-driven business, right? Nothing would have happened unless strong relationships were bonded well before this deal took place. And I always think, like, wouldn't it be great, for the reason why we're building this platform is, wouldn't it be great if all these people had a place to collaborate and share what they were looking for, what their personalities were, what their expertise were, so these kind of deals can happen all the time. Because, like, at the end of the day, I kind of felt like I got lucky on it a little bit. I got lucky. It's not all luck, but it's a little bit of luck because I found the right buyer at the right time, the right resources. But it was a super interesting deal and ended up being, a big land deal, a relatively big land deal, and it's going to end up being a huge build for rent project and probably a really successful one.
And impact the lives of many people for good.
We're good, yeah. More rental, the
Yeah.
more good rental supply in areas like the ones he's building in means people have more options, which means rental rates hopefully won't go up as much as they would, and they'll stay, more affordable. And I think that's a good thing. I think that's part of the reason why I like this business is I think we're helping create that.
Exactly. Exactly. Well, I'm super curious to know a little bit more about Strata, and you mentioned that you think your second best year, or you're getting to your second best year, and
Yeah.
I wonder what business model or strategy you, in your opinion, have been gaining the most traction lately for your business.
Yeah. For us, the strategy of pivoting away from build for rent by and large and toward land and lots was a really big one for us. We ended up doing, like, first year, it was like 80% SFR portfolios and like 20% build for rent. Then it turned into like 60% build for rent and 40% SFR portfolios. And eventually it got to the point, like, just like last year, we were doing almost all land and lots. And I think if I was going to boil it down to a strategy, it was us listening to what people needed, when it was probably a lot easier for us to just keep on doing what we were doing. Like, there was a time somewhere around like 2023 where, like, all I was doing all day long was running this SFR portfolio analysis and disposition system. And, like, things were working great, but it got to the point where we had to, like, get 3 times the amount of inventory to make the same sales. And it got to the point where I felt like we were, like, almost prodding at portfolio owners to do a sale instead of them coming to us asking, for the sale. There are all these inflection points where, like, you feel like you're pushing instead of attracting, chasing instead of attracting. And in all those instances, going from SFR to build for rental land and lots, I guess the strategy was, like, listen to what people were telling us they needed and try to get away from what we were comfortable doing. Because in any business, I feel you can get really comfortable doing what you're doing now, even if it's not the thing that needs to be done anymore. Like, take Kodak, for example. Like, they were busy making photos, right? They were a filming company. All the while, the whole industry was going toward digitized video and film, and they missed out on that entire trend. They kept their heads down. They kept doing what they were doing. They kind of ignored what was going on in the world. And I always kind of use that as a use case for our business, where we got to pivot all the time. We got to make sure we understand the trends and understand what the buyers are doing and what they want, where the owners want us to be active, and how they want us to help. And that's the strategy. Just, listening to what people
Yeah.
need, trying not to be too tied to what we're doing so we can make those pivots when the time comes.
Exactly. Yeah. I feel like no one should not buy what they don't need, and businesses that want to stay relevant and competitive, they need to be able to innovate and recreate themselves as they go and they feel the market and they take the hits and they take the wins. So it's definitely being able, the ability of, like, being able to renew your offer and focus on different aspects based on where you're seeing the most value being delivered is definitely a skill that will keep companies relevant or make them become irrelevant if they don't do it.
Yeah, yeah, it's funny. Like you start thinking, and for me, I started realizing that I was less in the real estate business and more in the alignment business, right? It's funny. It's a weird way to think about it. I always consider myself a broker that sold real estate, and
Mm.
the more I kind of vetted who we are in the world, and driving toward this new platform that we're launching later on this year, the more I realized just the real estate I sell is just the thing I'm doing right now. Really, the value that I create, my zone of genius, if I can call it that, is not selling real estate. It's figuring out what people want and figuring out how to find that very thing. If I applied my talents to a totally different asset class, that same concept would still take hold, right? There are marketplaces where a bunch of people just jumble in and they trade, and that's all well and good. But for a small business like ours that kind of made our mark by being this matchmaker and being this company that was really intentionally pairing instead of just blasting. I realized that that's really the business I'm in, and it'll probably evolve certainly past SFR, built for rent line and lots, which we're doing right now. See it going to other asset classes, maybe not even in real estate, maybe in another vertical altogether.
Exactly. The fundamentals would still work no matter what the asset class is.
Yeah, yeah,
Um,
I agree.
yeah, but I wonder, during the current like deal cycle that you have, talking about some challenges now, what has been the most frustrating for you or your clients that ultimately it raises a flag and say, oh, this is not going to go through, this is going to fall apart. Like, what has been the most frustrating, challenging part of the deal flow?
Yeah, yeah. Well, for us, the most frustrating part is, the amount of listing opportunities, the amount of the sheer volume of asset opportunities we get, um, and the relatively small amount of owners we're able to actually help in our business sell their property. Like in any given month, we might see 500 or 600 assets, and we'll only end up picking 35 or 40 or 100 of them because they exactly fit what buyers want. And that's a problem not of us not having enough buyers. That's a problem of us not having the right tools to make sure we understand what buyers want at all times and attracting that very inventory. That again, that misalignment concept that I kept talking about.
Hmm.
Extremely frustrating. Like when people that I know and like that I want to help have a problem like a property to sell. And I know we've got buyers in our network that probably want to buy it, but they're not on the service. And that alignment can't be found in a systematic or even like slightly scalable kind of way. It's very frustrating. And I feel the same thing for our buyer clients. Like I have calls all the time with all kinds of people that are just like, help me find a property. You'll earn a commission. You've got tons of inventory. Just find us the right one. Like I always give the example, like I was so busy doing those deals for a long time before I realized I had to stop doing those deals, to step back and look at the larger picture about the problem I was facing.
Yeah.
And it was a scary thing because it costs a lot of time. My business, every minute you're not selling is another day that's going by, and one more day past, the next commission check that you're earning. But luckily enough, I've been successful enough in what I'm doing where I'm no longer starving and I'm no longer grabbing for the next deal. And I had the opportunity and the option to stand back and really think about this problem strategically. And what I came to was I got to stop doing what I'm doing. I got to stop being the guy digging the holes every single day, because if I'm digging holes, it means I don't have any time to build a tractor to dig the holes for me, right?
You can't look the battlefield if you're too busy digging,
Yeah, you
right?
can't be a general if you're too busy being a soldier, right? So
Exactly.
it was a hard shift for me. I like being a soldier. It was one of the things I really, really enjoyed. It's part of my personality. But the more I see like young people coming in to the industry, like they're in their mid to late 20s or early 30s, and they're looking at what I did, and they're like, "Hey, this is great. I want to do the same thing." And I'm like, "Awesome. I'm glad you like it. I can't help you in a particular kind of way. I haven't built anything to help you." I started to think
Yeah,
it was a very selfish endeavor I was involved in, and I just decided not to do it anymore. I just take a step back.
amazing. And as you take this step back, I think it would be really valuable to the audience and even to myself, like to understand which KPIs or metrics are you paying the most attention for your business? Is it
Oh,
like deal
I see.
volume or like time to close or buyer response or like what are you looking at as you like play the general role more now?
Yeah, once, absent of all the marketing KPIs, which are super important to us, how many people are viewing our landing pages, how many people are viewing our content and emails, and how many of those are converting into actual people that are raising their hand saying, I want to talk to you, and how many people are converting into that stage to actually talking to us. Like once we get a deal in hand, the most important KPIs for us is number one, when we send a deal out, how many buyers actually open up our offering. That tells us how well we're matching, right? Number two, how many of the buyers that open it up actually pursue it? That belies how well we put the deal together and how the view actually matched up with the promise. And then it's, the next number, which is how many offers were we able to procure based on the amount of people that were opening up those deals. And that's a function of how well we priced the deal and how well we explained it, right? Ultimately, once we get it to the point where we have offers on the table, our job is essentially done. You know, there's the negotiating part, which is like the easier part. An attorney usually handles that. We play some role, but our real job is to create the market, right? So all those KPIs I just mentioned, and probably 10 other ones that we pay attention to, are the most important because it gives us an indication of what we're doing in terms of inventory and how we're pricing it and packaging it and picking the buyers we show it to, how well we're doing that. And those are the things that are the most important.
Amazing. Amazing. And now like this is like an internal look and I wonder for an external look when you look at the market, what key signals you watch to gauge some market health and how are those trending nowadays?
Yeah, I think certainly supply. How much supply of residential homes are on the market, how long those homes are sitting on the market before sale, what kind of rebates builders are offering to sell new construction homes. Those are like three general things I watch in any market to kind of gauge the health. Because obviously, like the less time things spend on markets means the more buyer demand that's out there, the less inventory. What's happening now is inventory is rising and buyer demand is waning. So that supply that was like at super low levels in the mid-teens of the 2000s are now, it's turning into more of a buyer's market out there. In fact, I think it probably is a buyer's market right now without actually looking at the numbers, because a buyer's market is a very specific number about how supply and demand are happening at any given time. But yeah, those are the things I think that generally bode for or talk or speak to the health of a real estate market. And on the rental side, we look at things like, same things, days on market, how many new rental listings are coming up, what kind of rebates are being offered by landlords. So yeah, nothing too special there. Just like any other broker, we look at inventory, supply and
Right,
demand.
right, right. And you mentioned already that you're excited about this new platform that you're launching soon. But what else excites you in the next 6 to 12 months for the company? Where do you see the company getting to?
Well, what's exciting me the most right now is like my ability to step back from Strata, doing the day to day selling and creation of deals, and stepping more into a founder role with the new platform. So I'm actually going to be hiring two or three new brokers to run our entire Strata model over the next, 1 to 2 months. And I love having a team. I whittled down my team to like just a very small like skeleton crew, and now we're at this point where we get to actually scale it a little bit, and I get to take on some new brokers where all my brokers have done really really well. I'm really excited about that because I think mentoring people and finding something special in people that they want to do something with their lives and they're trying to find a vehicle to do that in, being that vehicle is a really really rewarding and exciting thing. So yeah, that's what I'm most excited about is finding those people, getting to know them, picking the right ones, and making sure they succeed.
Yeah, staying truth to the motto of people first, relationship first.
That's right.
Nice, I like it.
Yep.
Yeah, to end our conversation here with a question I like to ask everyone. If you could have a wave a magic wand and fix one bottleneck in your current operations or in the market conditions, what would it be?
One, there's a bunch. um, the first bottleneck we are going to solve is the issue of um, buyer demands and helping buyers not only tell us what the demand is, but also keep that demand updated from day to day and give them the tools to show that demand to as many different conduits as they can. That bottleneck of from a buyer's perspective, in order to tell a conduit like a broker or an owner or developer or builder or whoever that might have inventory, here's my buy box, even though they know it might change in a month or 2 months or a year from now, and they got to circle back. Like it amazes me in the highly advanced technology, AI enabled world we live in right now. Like it should be like, hey, let me just create my ideal buy criteria and have it live somewhere and have it breathe and have me be able to do sharing of that information without me having to have a million conversations. That's a huge bottleneck for us. Like I said, most of the time, we have inventory, we're chasing buyers that we know. And if we could solve that problem of creating that transparency and scalability for buyers to leverage our service and other people's services, I think that's going to be a huge win.
Amazing. Well, thank you so much, Adam. This brings us to the end of this episode. This podcast is sponsored by Inevitable Flow. We help architecture, engineering, construction firms generate a consistent flow of qualified project leads using AI-powered outbound systems so they can grow revenue without hiring a sales team or relying on unpredictable referrals. If you want to book a free consultation to find out more, click the link in the description of the show. I'll see you next time.